How's it going, everybody? My name is Antonio, and I am on the barbecue today on November 9 with Alistair McIntyre, the president and CEO of Altiplano Metals, a gold, silver, and copper producer focused on building out cash flow from their assets in Chile and growing from there. They're also, by the way, a part of the metals group of companies. Who's not here with us today, though, is your financial advisor. This conversation is not going to include any recommendations to buy or sell absolutely anything. Instead, it will be just a talk, casual talk between two people on the internet. And if your mother didn't tell you, you're not supposed to listen to strangers on the internet. So for as far as you as a listener or viewer are concerned, this is going to be a conversation that's general and impersonal in nature. And it's definitely not one that you want to use as independent research because it's going to include a lot of forward-looking statements about uncertain events that may or may not happen in the future. Take a minute to pause the video and read the full warning that is in your screen right now, unless you like losing money, because the mineral exploration, development, and mining industry is among the highest risk industries out there, and you should be careful and you should do more research. That all said, as I said, Altiplano is listed on the TSX Ventures Exchange under the ticker symbol APN, where an average of about 20,000 shares trade each day, with a market cap of about 10 million Canadian dollars and about 125 million shares outstanding. This is an 8-cent stock with a 52-week high of about 20 cents and a 52-week low of about 6 cents. There are roughly 17.5 million warrants at an average price of 21 cents, as well as 6 million stock options at 20 cents, for a total fully diluted number at give or take 150 million shares, where another 15% of the company, by the way, is owned by management directors. At the end of Q2, Altiplano had about $280,000 in cash, about $180,000 in account receivables, and $330,000 in prepaid expenses, for a total amount of about $800,000 in current assets. That is against about $2 million in current liabilities, mostly made of account payables and a lease liability. In terms of long-term debt, there is about $1 million open in a promissory note. This is a revenue-generating company, though, as I mentioned at the beginning. So they generated about $640,000 in Q3, and I believe about $800,000 in Q1 of this year, with quarterly revenues being as high as almost $1 million back in Q1 of 2022. And all in all, over the last 5 years, the company has managed to generate an average of about $2 to $2.5 million in annual revenue between 2018 and 2023. As I said at the beginning, Altiplano has assets in Chile. Those assets are just a starting point for the company, but they are the main focus right now. There's a total of 2 assets here and a mill. They are located in northwestern Chile, about an hour flight from the capital of Santiago. Main focus here is, again, producing assets because they're cash flowing. This is what the company hopes to be using to grow organically from there. The main producing asset is called Farellon. It's a copper gold mine, which is currently mining high-grade copper, so it's 1.7%. That is being mined, and then that's being milled and processed about 15 kilometers away from the mine. So it's also infrastructure that the company commissioned and built and now owns. The mill is new, so it was commissioned in Q2, and it's been in operation for only a few months now. It's called the El Peño mill. It's a ball mill with a flotation circuit and a dry stack tailing system, which means that there's no tailings dam needed. It's capable of doing about 5,000 tons per month, so it's not huge. And it's also potentially an additional revenue driver for the company through the iron ore recovery, as well as, again, they're not doing it right now, but potentially toll milling contracts or expansion of the mining operation itself can be supported by this mill. Some of that extra ore could come from the other past producing mine that the company owns. It's called the Santa Beatriz mine. It's about 2 kilometers away, so it's basically right next door to Farellon, and so about 17 or 18 kilometers away from the mill itself. Santa Beatriz is similar in mineralization, of course, to the other mine, in that they both share the IOCG type vein-hosted deposits, and them also being close to each other is where Altiplano sees an opportunity, as they believe this could be the sort of the top of a larger iron ore copper gold district, IOCG, right? Iron ore copper gold district, again, potentially. So forward-looking statements is what I was talking about. Currently, Santa Beatriz is permitted to do 2,000 tons per month, but that could potentially be ramped up to 5,000 tons, as the company believes that there is exploration potential both on the untested sort of existing veins, as well as at depth below the mining operations that are going on. The main strategy with these assets is, again, to turn them into cash flowing operations that will then help the company grow into a mid-tier precious metals and copper producer, which is obviously what we're going to be talking about here. They seem to be already moving in that direction, looking for growth by acquiring claims on an almost 17,000 hectare gold project in Nicaragua. It's called the San Pedro project. It's currently under review by the Nicaraguan government, and it's also going to be part of the discussion today. So it doesn't sound like a complicated story to me, but I am known for making many mistakes, especially when my wife points them out. So I'll get to shutting up now, and I'll welcome the CEO. So Alistair, thank you so much for investing your time with me.
Yeah, thanks very much, Antonio. Thanks. That was a very good summary. Thank you.
Pleasure is all mine, of course. What am I missing in the summary? What did I get wrong?
No, I would say that you've hit on most of the details. I mean, we are, as you say, a little bit unique to the junior space, is that we are generating revenue from sales of copper, and we want to leverage that from the perspective of taking material that we produce at Farellon and processing it through our newly commissioned El Piñón processing plant. We're very close to getting our first concentrates produced and sold. And that generates, opportunity to leverage lower processing costs, lower transportation costs, and also be able to pick up, additional income streams on a separate iron concentrate sale, but also pick up gold in the copper con that we don't typically receive from, selling directly to an AMI. So yeah, that's the kind of, in a nutshell story, really what we're looking to do with this, I would say, as I say, unique position in terms of our cash, is use that, as we have in the past, to reinvest into new equipment, development of assets, building out of projects, and taking that next step to build out, something more significant, something of scale, both in terms of that production side, but also looking at it from the point of view of exploration upside. I think most people, most investors are looking to opportunity for upside, blue sky upside, and I think that's what is looking. What we're looking to accomplish is to bring in projects similar to that scale. And we've seen that through our sort of company Metals Group. Many of the companies in Metals Group, Thesis, Tor, Founders, etc. They have a great penchant for being able to pick up, good scale, sizable assets that make a difference. And I think that's what we continue to look for. That'll be our next step.
So it seems like a straightforward operation, if you will. And you've also been at it for a while now. And again, it sounds like you know what you're doing and you know where you want to go, but the market doesn't seem to share that enthusiasm with the stock now sitting at close to all-time lows with less than $2,000 of daily volume. What's happening there? Is this the market, or is this something else that you think is going on?
Well, look, junior space is challenged for sure. We are no different to our peers. Many peers have lost 75% of their market cap in the last year. I think we have that unique situation again, that we can continue to manage our operations and build out cash flow, et cetera. And many companies who are looking at raising cash are challenged. It's a very, very difficult market. It's probably the worst market that we've seen in 10 years. 2015 or 16 was, call it a low period. But gold price was $1,200 then. Now we're at $1,900 arguably in gold, and we still have a very difficult capital market structure in terms of the general overall market. If you look to the entire gold junior mining space, the average daily volume is just $27 million for the whole industry. So with respect to our sort of low trading volume, we suffer those issues that most suffer. But end of the day, this is a cyclic industry, and we do benefit from when the markets turn. And ultimately, copper, gold are metals that basically trade very high volumes, and the interest between the underlying and the equity is the widest we've ever seen. So ultimately, that gap will narrow, and I wouldn't suggest that the metal price is going to come down. You're going to see the upside, the uptick with respect to the equity side of the business. So, I'm confident we'll see a return to the industry, but it's all focused, as we know, it's all focused on interest rates and what's happening in the Fed, and the concern around volatility and the concern around our interest rates going higher. Personally, we're probably seeing a peak on this. And once that has emphatically shown that the Fed is no longer going to continue to raise rates, then the risk will return. People will come out of U.S. Treasuries. They'll come out into products that have a little bit more risk, and junior mining really does benefit in that situation.
Is there something like, I don't know, a catalyst or something else that you think you can do to bring back some of the excitement into your story? Because the market is bad. There's no arguing there, but there are some stories that are catching some of the attention. So is there something that you're waiting for or working towards that you think could bring back the excitement?
Yeah, no, 100% on that. I mean, each company has a responsibility to its shareholders to ensure that basically they're demonstrating company growth and providing value to shareholders. And we as a junior company are positioned to do that. I mean, our next steps will be, finalizing the sale of concentrates, both on the copper and on the iron out of our processing facility. That'll be a milestone, and that will have an opportunity for a re-rate. We're looking at Santa Beatriz as an additional asset that we'll begin to do some exploration work there. We've been underground. It is an underground accessed property at the moment. So we've taken samples. We'll ultimately be able to pass those through and build out some modeling and leapfrog and look at it from that development perspective. Our thesis is that these particular types of vein structures continue along strike, and they continue, more importantly, at depth. And, our neighbors to the south of us, just a kilometer away, kilometer and a half, are underground by almost 2 kilometers now. And they've been operating for 80 years. So these are very deep-rooted systems. So we've got opportunity to further develop that at Santa Beatriz. But also within the region, there are 100 projects within 100 kilometers. So there's a great opportunity for consolidation. So that's really where we will focus on, is growing both organically at Farellon by providing opportunity to increase our output, look at Santa Beatriz as an additional production asset, and look at bringing in regional projects to support the work that we're doing at these two assets, and ultimately continue to look for a big project. We see a lot of projects every day, and particularly in Chile. I mean, Chile now, through its new structure with respect to the projects and project rental and how things go through the Ministry of Mines on concession basis, the cost has essentially tripled. And some new rules are coming in to kind of shake out a lot of things that have just sort of been hidden in the weeds, so to speak, that hasn't been essentially become productive for the government through ownership of the tenement. So now basically a lot of projects are being kind of shaken out, and new opportunities are there for those who are prepared to look at bringing on additional assets. So that's something that we look to do and spend a lot of time on, and recognize the importance of being able to grow the business. But a lot of it comes down to this completion of the mill, and that mill producing leverage cash flow to give us that opportunity to move forward. That focus needs to be completed, and we're pretty close to that. Look, we've demonstrated for 4 years at Farellon, 4 years plus, is that we've effectively mined this project. We've reduced our costs. We have improved our operating grade, mindful of grade control. Look, most projects are producing today at half a percent, 0.5% copper, and we have the opportunity to mine on average now at 1.8, and we're seeing over 2% at some of the mining areas that we're in now. So I think there's good opportunity for us to use these basics to move the company forward.
I do want to talk about the mining operation itself, obviously, before we get into talking about the growth. And you just today had your Q3 results. Seems like revenue has now declined 3 quarters in a row, though. What's happening with that? It's just normal fluctuation or something else?
Well, I mean, we have seen the copper price go from highs of 1 year ago to where we are today. So we as a copper producer and seller are not sheltered from lower copper prices. So that has some impact. We've seen a little bit of decline in the amount of copper that we have produced, and part of that has been you sort of mindful of managing production and establishing a production profile for the mill. We essentially want to and will produce 5,000 tons a month when we are in full production at the mill. Producing at 5,000 tons now does help a little bit of cash flow, but it is a little bit of an opportunity cost because we're sending it and we're losing iron, we're losing gold, and we're paying higher transportation costs, and we're paying for higher processing costs. So ultimately, what we want to do is manage our production as we have at these particular levels. And once we see the mill on full scale production, then we can ramp up to 5,000 tons, and we can use that material to leverage better opportunities to increase our cash flow.
Mm-hmm. You're also mentioning the head grade that you're mining. You're mining now about 1.7 and 1.8% copper, at times 2.5% copper in the past. If you can,
right.
If we let's round it up to 2% copper, just for the sake of the blood flow to my brain, because I'm going to be doing some calculations here. That's 44 pounds of copper per ton. At 360, where the copper price is today, that's about $160 of ore in a ton of dirt, basically. But you're then crushing, grinding it, then you're floating it, and then you're selling a copper concentrate, as far as I understand it. Talk to me about that. Talk to me about recoveries. How much does that concentrate sell for, and how much does it cost for you to move that ton of ore and then come up with the copper concentrate?
Yeah, well, I mean, the process now is that we are selling to Anami, which is a local state-owned processor, and they pay on a value basis on the percentage of copper. And as you do that calculation, it can range from $50 to $100 a ton, depending on what your grades are. So that also includes, their processing costs. There is a particular grind in that because, assays are very difficult to establish, on a per ton basis of rock, because it's not very homogeneous. So once we produce a concentrate, then we have that opportunity to have a much more homogeneous concentrate sampling process that will result in better grades with respect to sales. So the concentrate itself, it is a formula based on the called LME price. There is a treatment charge, there is a refining charge, and there are deductions with respect to if there's any impurities, et cetera. So it is a fairly complicated sliding scale of where copper prices are compared to those varying deductive costs. So it's difficult to say, all right, here's a number at 360. Well, 360 represents, a particular valuation on concentrate. But, we factored in around, call it $3.80, that, we should see somewhere around $650,000, $700,000 per month in sales of concentrate. And then, of course, we've got additional opportunity to sell our iron concentrate, which, in China sells for about $120 a ton now. And, of course, we're not shipping to China and we're not getting that price. But the Chinese market is based on around 62% iron. And we're producing greater than 70%, and will produce greater than 70% iron. And it's a very highly desirable product in Chile because of its constitution, in the sense that, most iron is produced in pellet form. This is in a small 150 micron kind of sand. And so it's very highly in high demand. And also, with respect to its purity, that, we can see, looking at a sales contract that could bring in an additional $150,000, possibly $200,000 a month in iron sales. So we're looking at the opportunity to capture some fairly reasonable revenue streams, and including grams of gold of maybe 2.5 grams of gold in concentrate. So ultimately, that's our goal, is to leverage the production coming out of our concentrate.
Right. How, and you're trucking that ore to, what's the cost there? What's the total cost?
Well, total cost to, ship from Farellon to the mill is just a few dollars a ton. You're shipping, material to 100 and something kilometers away is going to be in this rate $11, $12 a ton. Shipping concentrate to a storage facility, may add an additional $10 a ton with respect to total concentrate. But, ultimately, those trucking costs are significantly reduced by the fact that we are 15 kilometers versus 100 kilometers. We do have a cost to ship material to San Antonio, which is, a few hundred kilometers away. But because we're shipping, high value concentrate, it doesn't have the same impact as shipping, raw material at, 1.8% copper.
So that's 5,000 tons per month that the mill can handle.
Yes.
At $12, that'd be 60 grand, I suppose, per month, basically, that you're doing. So, wouldn't it make sense to maybe think about, and I'm not trying to be an armchair CEO because I have no idea what I'm doing. I'm just thinking out loud, does the topography allow for a conveyor belt or something else of a sort where that declines your cost?
From the mine to the mill?
Yeah.
At 5,000 tons, as a small scale producer, it wouldn't warrant that infrastructure. And it's 13 kilometers away and it's going through a lot of private residences. So it'd be very, if not, I wouldn't say it's a challenge. It wouldn't be practical.
There's G&A on top of that. Oh, so I say, how's G&A now?
From what perspective?
What's the size of the G&A? I'm just trying to calculate basically what I'm getting to, and feel free to just tell me that number if you know at the top of your head, is how much money you're making per ton here. And if you ramp up to the full production, how much money are you going to be making in terms of profit, reinvestable dollars, basically?
Yeah, well, again, this is all very forward-looking, and it's not numbers basically that are reportable. The sales that we're seeing coming out of our concentrates, if we are producing at 300 tons in a month, as I mentioned, we can be up north of $700,000. And, we're seeing probably our total cost at about 400,000. So there's opportunity, for that remaining 350,000 to be sort of net of costs. And so that's basically the objective that we're looking towards. And of course, that will come out in terms of our full scale operation, and we'll have a better understanding as we move forward. What we're seeing now is, effectively enough money to manage our business in Chile coming from the sales of material to Anami. But of course, the whole purpose of this is to leverage, the cost savings of producing at the mill and leveraging, opportunities for a higher value product in a concentrate for sale.
How are you dealing with grade control in that case? Again, it seems like grade can fluctuate somewhat between, again, 2.5% down to, in some occasions, 1.5%. Yeah. Who dictates that? Like, is it random, basically Mother Nature, or does it depend on how you operate the acid?
Well, there's probably the answer to that is both. We know where higher grades are within the mine, and fortunately, as we go deeper, grades have been improving, which is important from a mining perspective, because as you go deeper, quite naturally, your costs go higher because it costs you more to bring it to surface. So as we've been working on since the 3, 5, 6 level, as we've gone deeper, we've seen grades, in the 2.5%, and that's shown up in our drill core, and that's also shown up on call it grades that we're sending for processing. So we manage it both from the access points and also from a call it dilution perspective, that we have 2 methods of mining. One is with the jumbo, and a jumbo is an automated machine that has, 4 or 6 different drill bits, and can very automized, drill into the face to prepare for next blast. That is a machine that has certainly a lot of control, but we also use jackleg operators who are basically hand drilling with machines in, call it, narrower spaces. And that gives us an opportunity to mine, specifically for the vein width and avoid significant dilution in some situations by using larger machines like a jumbo. Now, having said all of that, the vein structure has sort of two mineralized zones. One's typically heavier in magnetite, and the other is heavier in chalcopyrite. So obviously, where we are, we're not getting any credit for magnetite. So we therefore try to establish a mining method that really just captures the copper. And so that's why we'll see grades of, say, 2.5%. But processing at the mill, the sweet spot for the mill is around 1.5%. So ultimately, when we begin our operations at the mill, our mining methods will change a little bit, because we can widen our vein, we can increase our tonnage, and we can maximize basically our output, based on grade. And look, we have got a lot of material to the southwest of us that we have yet to mine, which is of a lower grade copper, higher grade magnetite. But to sell that to NAMI, you don't get very good value. So that's why we focus on where we are, and that's why our production amounts aren't at 5,000 tons now. It's because you want to maximize, that sale and not over leveraging our sale to NAMI. Now, the frustrating part is, yes, you want the mill done so you can move these points higher. You can start producing 5,000 tons. You can get a concentrate, all those things. But time is something that sometimes you don't have a control over.
It's true. I will know. It's but what's the timeline for getting to that 5,000 TPM? Because as far as I understand it now, when you get to that, or if you get to that 5,000 TPM, you're going to be doing about $1 million to $1.5 million in profit per year, because
Right.
350 per quarter.
350 is something I was talking on a monthly basis.
Monthly. Okay, good. Well, better. Okay, so you're going to go to $3.5 to $4 million profit a year once you're at 5,000. What's the timeline to getting to that point?
Well, we basically have completed all of the mill installation, the testing, the commissioning, and we've run and produced a small amount of concentrate. With respect to any processing facility, you have a little bit of tweaks, and you have a little bit of optimization and sort of replanning around production. So that's kind of where we are now. We've worked through those bugs, and let's face it, we've done a very good job with respect to marrying two types of facilities here. One was a previously used mill. We put together in a very new facility that basically integrates some modern processing technologies with respect to the iron separation and with the dewatering. So that takes a little bit of time to integrate and to work out a little bit of bugs here and there. So that's where we are now. Those should be completed, I'm hoping, within a couple of weeks, and from there we can move into, call it full scale production. And so I would anticipate that we will be maximizing our opportunity and output very early in the new year. So that's probably a little bit beyond the timeline that we initially looked at. But ultimately, there's a lot of things that you just don't have control over, and we are trying to focus and manage the things that we can control. And part of that will be getting our production up and running as quick as we can.
What are the main challenges here to get to that point? I mean, in terms of what are you focusing on? Because it's permitted. I mean, the mill's permitted to get to that point, to 5,000. Right. What can go wrong? What can slow you down here?
Well, I mean, it's mining, so there's 1,000 things that can go wrong. But in terms of those that you have control over, and that is essentially ensuring that your machinery and your operations and your processing equipment are all aligned and running. And that's basically what we're looking at now, is finalizing, some of those tweaks that are required with respect to the ball mills. And that's taken a little bit in terms of having to readjust some gearing. And, once you have both ball mills that are kind of not working, then you have any production. So you have to wait to get that type of adjustments completed. And so that's where we are. We're making some adjustments on the gearings and the alignment of the mill. and effectively, we'll be completed that in the next couple of weeks.
In terms of the people working there, you're all staffed, because when I talk to CEOs, that's one of the main risks they talk to me about, is like labor. I don't have enough, experienced people. It's hard to find them. It's hard to keep them. How's that for you?
Well, look, this is post-COVID, and we had a lot of, I would say, issues around supply chain, like everybody else. In Chile, during the height of COVID, the borders were shut. It was difficult to get things moving in and out from a supply perspective, just simple things like rebar and that sort of thing. So that took a little bit of time to get organized. And in fact, the permitting process took a little bit longer than anticipated, because we put together a very, very efficient operation that dewaters, that removes tails, reduces tails. There's no tailings dam. And so that took a little time for the government to figure out. And with COVID and people not working so much, it just it fell into a black hole for a while. So that put us behind a little bit. But to the point on staff, we're fortunate because Chile is a mining focused country, and La Serena is a mining focused community. It's around Andacollo, which is to the north, Coquimbo to the north. So there is a lot of talent that goes through La Serena because of the universities that are there. It's a fairly major city. So, we've got access to whom we need to move these projects forward. We've got, dedicated mine operator. We have a dedicated processing engineers, and we've got, staff that have had significant experience with respect to the flotation and the crushing. Interestingly, when we put the put out the we're hiring kind of message, that we had hundreds of applicants. Of course, you have hundreds of applicants no matter what you do, but filtering it down and narrowing it to experienced people, we were quite surprised and quite pleased at those who had operational experience. And it's become very important because a lot of these sort of tweaks that we've been going through in the past sort of couple of months, these guys have participated in solutions, and not just, hey, I'm a worker and I do my job and punch my time card and get out. I mean, these guys basically have had experience in flotation and crushing and the mill operations, and they've been sort of instrumental into helping us sort of tweak these systems.
There's multiple things that I could ask you off of that, or basically sort of try to grill you on. You feel this is the barbecue after all, but it comes down to what I'm getting out of this is, if we're talking at the end of 2024 and we look back at it, we're going to see a couple of million in annual profit,
right?
And potentially forward-looking statements. That's what I mentioned at the beginning. But again, I'll just go back to the valuation of the company. Like, how's the market? Is the market not getting it? Does the market not want it? And what's really the potential from then on? So maybe this is where we talk about what else is going on. Maybe this is where we talk about what's happening at Santa Beatriz right now. This is a piece of ground between Santa Beatriz and Farellon, and like who owns it and that type of stuff. Maybe we can talk about that.
Well, sure. I mean, but we seem to be coming back to valuation, and the market's not getting it. And look, I'll also throw it back, is that the market's just not getting anything. Our peers are suffering the same in terms of valuation. But also, I mean, you look at this, and if those numbers do sort of pan out, I mean, those are numbers that really are important for a company, because it can demonstrate that you've got cash, you're sustainable, you can effectively be there for that next year. But the goal is not to effectively look at a certain amount of revenue, small amounts, and take a multiple of that and say, here's where market cap should be based on. The fact is that from mining companies' perspective, investors and analysts, they are using their valuations based on a potential upside. So that's, again, to reinforce that comment, is that, we're doing a good job to get Farellon, leverage with respect to higher outcome and higher productivity and higher revenues, and use the mill basically to have some benefication to that, to provide greater sales opportunity. But that's not the end game. I mean, that is the start. I mean, once we have that, again, sort of differentiating ourselves from those that are going out to drill holes and get some results and hope they're good results and go back to the market, raise money, and do the same thing, rinse, repeat. I mean, that's a very difficult market. And I think the market's recognizing that it is a challenge. I mean, if the capital markets aren't supportive of that model, in which they're not, then you have a hard time being sustainable and running your business. So that's what we're looking at here. We recognize that the capital market is a challenge. We want to be in a position where we have cash, that we can use that cash to reinvest. But to your points around, where we are, and mentioned it earlier in the conversation, is that, yeah, we've got opportunity to move something like Santa Beatriz a little bit further. And that's great. And it'll produce, like, for example, another Farellon. At Farellon, we can increase our output to, say, 10,000 tons through potential increases in permitting. And that's not a big thing. And that involves, new mine planning, et cetera. But, the real opportunity here is expansion of those in terms of concession size. So there's numbers of concessions that are available, to the north of us and in between Santa Beatriz and Farellon. There's ground that's currently also a very similar vein structure. There's a local miner who's doing some work on it. So there's things that we can look at in terms of that total consolidation within the region. However, as I mentioned, the real prize in all of this is to find a project that we can effectively be operating, if we are an operator, at 50,000 tons. And that's projects that we look at. But, those projects don't come every day, and they always come with some, as the Aussies like to say, some hair on it. So you've got to figure out, where is that right sweet spot in terms of a production asset. And then you've got to have the capital markets to support it. So, where we are in this growth process, getting in and buying a $100 million asset at a low market cap, that's too challenging. So ultimately, you will want to grow your market cap through organic growth, through operations in expansion of the projects that we're working on, and find an exploration project that we can come in on a kind of low cost, that is an option basis. We had a project that in the Maricunga that we optioned for almost a year and decided that, we did the right work. We did the geology, but we determined that, for a number of reasons, that it wasn't the right project. So we dropped it. So, we're seeing good projects a lot, and that would be, something similar. We'll look at a project that makes sense to us. It has the right sort of capital structure and the right cost profile, and has the right sort of upside opportunity. Now, part of that is there with San Pedro in Nicaragua. And when we looked at that, going back a couple of years ago, is that it was a very good project, 16,000 hectares, I believe it is, with several kilometers, if not 12 kilometers of gold-bearing quartz veins, with numerous, historical production pits, with small diamond drilling and, sampling of up to 40 grams per ton. That's the type of project that we like. But unfortunately, it's something that's, sitting with the Nicaraguan government for them to approve the sales process. And you know what? That's something that basically companies Calibre and Condor and Mako and others have gone through the same thing. They've waited for several years for something to get passed. Now, the fortunate side of that is that, this is not a great market to be raising money to be working on gold projects anyways, and it is not costing us anything to sit on it. So indeed, if that process goes through and we are awarded the concessions, perhaps there's a better capital markets. And in that situation, we can start an exploration program. We can develop, a couple million ounces at maybe 1.5 grams or 2 grams per ton. And that's a project that people would resonate with. And we can effectively, leverage. We've got a good production story to keep our business going, and then find projects that are ticking the boxes with respect to exploration upside. I mean, everybody, whether you're investing in Barrick or Altiplano, you want exploration upside, or you want production upside. Just having that sort of, okay, you've accomplished the process of producing, making some money, but then so what, right? Because your multiples aren't enough to support a higher valuation.
It's also interesting that you're going into this without a PEA, so it's like I don't have or PFS or a DFS or whatever, so I don't have an answer to how many years of mine life is left in this. But as far as I understand it, this like you say the Chilean operations are not the focus, but could they be? Like could you 10x that operation where you're going from 4 million in profit to potentially 40 million, or is that just too much to ask?
Yeah,
No
look,
potential for that.
I don't want to diminish or suggest that they're not the focus. What I'm saying is, if in terms of growing the business, they can't just be these projects. There needs to be something in addition. So yes, we can grow these projects that involve expansion of underground. But when you're working on a short concession size, and effectively you're mining to depth to bring this to 50,000 ton over that small concession area doesn't make sense. So that's why I'm saying, in order to effectively be able to leverage something to higher tonnage, that we need more land, we need more concessions in that area. And then from there, you can look at it from the perspective of the consolidation side, but also growing your resource potential. On for example, a 5,000 ton, and you say no PEA, but look, we've been mining here for 4 or 5 years, and as we say, are drilling to levels 40, 50 meters beneath us, has shown that the vein structure continues at depth, and in fact shows that it essentially has improved with grade. Now, after 3 years, if we re-drill and we say, oh, we're not seeing the same amount of mineralization, well, then effectively at that point, we'll very, very likely have a similar smaller scale project to replace that, or to compensate it, or to support it. So I'm not that concerned that the project doesn't have a life of mine of 10 years, because as I say, these things continue at depth. They've got deep roots. We see that in the historical mining within the region. And ultimately, if indeed we do that consolidation, then yeah, we can put the several hundreds of not several hundred thousands, but tens of thousands of meters of drilling into these projects to support a PEA or a feasibility study, or et cetera. But let's look at a feasibility study. What does a feasibility study do? It demonstrates that your project has the resources that can be converted into reserves, and reserves are effectively the economic end of resource, by understanding the mineralogy, understanding the production costs, understanding the recovery. We know all that. We've been doing it for 4 years. So effectively, we have a feasibility study. We're beyond a feasibility study. We're demonstrating that you can do this and make money.
As I listen to you, I'm reminded of the scale of the project, the whole strategy of starting small and then ramping up to potentially something big.
Yeah,
I talk to Rick Hull often. I try to talk to him every month, give or take, and he always tells me that he's not interested in small projects. He says small mines and big mines both have big problems, but only big mines can make you big money. You clearly disagree with that, and it sounds nice coming out of his mouth because he's very eloquent and he's got a lot of that rhetoric. But why do you disagree? Why are you so confident this is going to be a successful model?
Well, look, the Rick Rules and others in the market, they're looking for 10x, 20x, 30x. And, if they don't get it, I can't be bothered to waste my time with it. And, there's nothing wrong with that if you've got enough in terms of your sort of portfolio management that the 10 don't work out and one does. And I'm not suggesting that, we have a different model that cannot return that type of return, because with the right exploration project, you can have that 10x or 20x or whatever investors think is their kind of entry point. But again, the point being through all of this, and perhaps it's a lost discussion, or perhaps it's taking a little bit of time for us to move forward with it or prove it out, is that the small scale mining plan here is not to bring that small scale from 5,000 on this particular project to 100,000 tons. It can be to bring in several smaller scale projects to generate enough cash to keep a sustainable business going. And with that sustainability, your options are expanded. I mean, effectively, you're not necessarily needing to call up guys like Rick Rule and say, Rick, we're out of money. Can you help us raise some money? And he'd say, okay, well, what do you need here? Well, we've got this project. Well, okay, it's not going to give me 100%, 100 times return, so I'm not interested. So that's what people are looking at here. The market has some greed, and fair enough. That's great. I mean, people want to basically invest in things that make them significant money. But there are very few people that are out there throwing checks at, I call it 10x or 20x opportunities, because the risk is too difficult. I mean, it's better to put your $100,000 in a bank account and make 5% and take that 5% and say, thanks very much. That's not bad. But, do you motivate somebody to, put that $100,000 into a company that can give you 3 or 4 times X? I think that it's a reasonable conversation, and it is a lot less risky. I mean, every project that people are investing in on that 10x or 20x is risk. And what are you doing in that situation? You're listening to that person who says, guess what? I'm going to sell you on this project. We're going to make a lot of money together. You better get in here because, we've already filled up our subscription and people are running after and writing checks. So, that model, I'm not convinced is really happening now. So it very sure will return because everybody loves greed and fear in the markets. And if projects basically are putting out drill holes with 50 or 100 grams per ton over 30 or 40 meters, and people are going to say, well, great, and gold's at $2,500 and a really frothy market. Yeah, people will be throwing money at it for sure. But that happens very infrequently and for very short duration. So you've got to position yourself to ensure that you've got cash to manage your way through those down periods. And this is what this model does. That model doesn't.
When it comes down to exploration, then that you expect to come, are you expecting to finance that out of your own pocket, or are you still going to be coming into the market this or next year?
It depends. I mean, it depends on the project that you have. If you've got something that's a huge, scalable district play exploration type project, and you need to drill 100,000 meters, well, you're going to need a lot of money. But the point being is if you do have that project, your valuation should significantly increase and your market cap can support a raise to do that.
Right.
So, are you going to raise at 10 cents to do 100,000 meters of drilling? No, you're not. Right. If you're basically at a much higher valuation and you've got a good project and that work will demonstrate or generate, millions of ounces at reasonable grams, or, 1 billion pounds of copper at 0.7 plus, you're off the races. So everything I think is conditional upon what you have, what you see, and what you can accomplish. So that's why you need to have a particular runway period, to build that growth. So yeah, as a CEO of Altiplano, and that's the kind of business model we have. Sure, it's a little bit challenging and frustrating with respect to the capital markets in general because it's not supportive in terms of adequate growth opportunity. Because if you do need to raise money, then you're faced with dilution. So the issue here is complete your work, continue to have boots on the ground, continue to do work, in your production and your processing. There's very few companies that are doing what we're doing. We're active. You look at our sort of, news flow, although it's been a little less active in the last several months, but we're doing things. We're not basically waiting around to raise some money to get a permit to do drilling or to get money to do drilling and just sort of sitting on, well, I raised $1 million last year and okay, now I've gone through $50,000 on a burn basis. So now I'm, that's something that's very different to us.
Talk to me then specifically more about what is not different to you when it, like, for example, you said that the project, the Santa Beatriz project has upside potential. You say that your main project has, upside potential at depth. How are you going to explore that? When are you going to explore it? Is it just through mining and sort of happening naturally, or is it going to be a targeted exploration program for that?
Well, every project has to have a targeted exploration program. You just can't necessarily make your decision that you're going to go mining. I mean, I think the point being here is that there is some good information from Santa Beatriz in the sense that there are arguably three exploration and production tunnels. So we can be underground, quickly to get information. The difference between Santa Beatriz and Farellon is that, Farellon effectively has one vein on the property. Arguably, it's a good vein. It ranges from 1.5 meters to 10 meters wide. And as you've known, it's produced at 1.8% copper, so very productive. Santa Beatriz has as much as 7 veins, and it's a larger concession size as well. So just generally, it has greater upside opportunity, and that's what we'll look to explore. We'll explore it from the geological perspective to sort of map out the vein structure. We'll go underground at the access points to essentially sample what we've seen and correlate that with the kind of known production data that we have, which is limited. I mean, it's a private company, so they didn't keep a whole lot of production data. The difference, of course, with Santa Beatriz and Farellon in the vein structure is that they chase the vein, so they follow the vein. So, and then once they kind of get to the end of their property or the vein offsets, they stop. And so the difference between someone like Altiplano and a private company is that we will get funding to effectively build a decline to go in along the footwall or the hanging wall, but typically along the hanging wall, drive a decline like we did with the Hugo decline at Farellon, and then effectively come into the vein structure. And so that way you can mine at depth and not just continue along surface as these guys have done. And once you've done that, you kind of run out of ore or mineralized material.
So I'm thinking mostly about money, as you've noticed here. And I'm thinking, where's the money going to come from? How quickly is that going to go? How much of that is going to end up in a news release? And then ultimately, how much effect is that going to have on the share price? Those are sort of the questions that I'm sitting with right now.
Yeah. All right. So in that basket of questions, which is the one that you want an answer to?
All of them. But ultimately, talk to me about sizes in terms of money that you're going to put into this and timelines specifically. So how much money, when, and how much drilling is that going to give you?
From the mill's perspective, apart from a couple $100,000, that's effectively, done. There's not necessarily a material amount of money that's required in terms of moving that project forward. Farellon effectively pays for itself also. If we want to establish it in terms of higher production capacity, well then, there's a certain amount of drilling and mine planning involved, and that's not a lot of money. That might be just a few $100,000 as well. In terms of Santa Beatriz, well, that's a little bit different because effectively to complete this exploration, it might be a few $100,000 to complete the exploration. But in terms of that next step after exploration, you'd want to put in probably 3,000 meters of drilling. And 3,000 meters of drilling is probably a couple $100,000 at most. And then effectively, that information should lead you to a decision to build a decline. And with that could be $1 million, $1.5 million.
What is the timeline behind all that?
Well, you can get a decline in pretty quickly, and the exploration work would effectively take several months. So by the end of 2024, you could be putting a decline in at Santa Beatriz. Again, if everything worked out in terms of your expectations in terms of the exploration side. Now, a lot of that, comes down to, again, capital markets, because, that type of exploration plan should be able to be funded out of cash, because it's not a lot of money. And that's assuming that, you build out in terms of building a treasury and having enough to support. The biggest cost is around the decline. So that's the kind of unknown. If we're sitting where we are now in these markets and you need $1.5 million, you know what? If you're not basically producing a lot in your treasury, then, you still got to raise $1.5 million.
Right.
And that's not easy for a lot of companies.
Right.
Yeah.
What is what's going on with the ground in between Santa Beatriz and Farellon?
Well, that's a property that is in fact owned by the mining contractor of our project at Farellon.
Okay.
And so he effectively is just doing some small scale mining to make a bit of cash. And so that's something that has an opportunity to open up in terms of discussion. And in terms of, where we are to the north of us and, similar ownership. So yeah, there's a relationship and we know the people and there's always a conversation, and it just comes down to getting the right valuation. Typically in Chile, like everything, everywhere, everything is overvalued, right? People want instant gratification in terms of a check without any participation of the risk that might be involved in someone writing a check. So there's from my perspective, it's always the right approach and always the right valuation to do a deal, because the cost of capital is extremely expensive now. So you're just not out there writing checks.
Well, but in terms of growth strategies, which one would you give priority? Sort of trying to get those deals at the right valuation to the north, in between, maybe a little bit of ground around that as well, or would you be focusing on different countries, other properties, maybe in Chile, but at another place? What is the priority here in terms of getting deals?
Well, the priority is basically, and I've been saying this for some time, the priority is finalizing the production coming out of the processing facility. And that once that happens, you have less stress with respect to cash flow. Because, if that project isn't producing, then you've got working capital considerations. And so that's essentially priority number one, is getting that up and running. And we're very close to that. So once that's done, then you effectively can shift your priorities in terms of growth. And that would involve, again, getting more data out of Santa Beatriz, because it's something that we have in terms of commitment to do some work. It's right next door to us. It's very similar to Farellon. It seems like it's low-hanging fruit. So that's essentially something we want to get moving on as quickly as we can. And that will be the priority. In terms of opportunity for expansion at Farellon, well, look, we've been talking about this for a little bit of time now. So that's something that, we essentially have some things that we're talking about and some things that we're hoping to be able to get completed and move forward with. So those are kind of, very, very sort of granular, call it strategy, tactical initiatives. Bigger stuff in terms of looking at other projects in Chile. Yeah, we're looking at stuff all the time. And we have, our geology teams that are effectively going to a different project kind of every month. And so it is important for us to find the right project, but also be in a position to fund it. I mean, you just can't say, "Oh, it's a great project. Let's sign it up," because you need to have, the support to do that. And again, part of this is getting this thing organized with respect to our cash flow, and then priorities will begin to shift. Now, I mentioned the metals group previously, is that these guys, we have a pretty significant depth of talent that involves 6-7 geologists, who can review projects, who, as a result of numerous successes with respect to projects, people are emailing in, projects every day. Now that's sometimes difficult, because then you get a stack of stuff that, you got to be able to have to weed through it, the time to go through it. And so, we have opportunity to see good projects. I mean, Founders is a good example. The project was brought, and basically it essentially was previous ownership, and now the Antonio project is under a lot of exploration and development, getting fantastic results out of it. And so that's the type of thing that we can continually be involved with, is because we've got that depth of talent to review it. But secondly, because success begets success, is that we're seeing projects quite frequently. We're not having to run off, how do we find projects? Like, projects are falling on our laps all the time.
But at the same time, it sounds to me like it makes the most sense to focus on what you have right now, grow that. First of all, obviously, the point where you're doing, as we said, about $4 million, between $3.5 to $4 million in annual profit and grow from there, or maybe grow in there, like grow that specific project. And so I'm thinking, how much growth is there really possible in that region? So maybe you can talk to me about how, for example, the local folks would feel if there was all of a sudden, a bigger mining operation, because you said a couple of small mining operations are there, but are the locals supportive? Is there really possibility for more growth?
Well, there's always an opportunity to grow. And again, these are still in the category of small mining projects. And so if you do grow these projects, then they become a bit larger than a small mining project. So again, it makes sense to consolidate and increase your cash flow, maybe double, maybe triple it. But will that turn you into an Agnico Eagle? I mean, that is the question. And in order to do that, you need to have projects of significance. So from my point of view is that, yes, we want to grow our opportunity within the region to increase our cash flow, because increased cash flow gives you greater leverage. But end of the day, the prize is to have a significant and call it flagship project. And that's what we will be looking forward to do. Back to your point about, will the locals support growth in these projects we're looking for? Sure. I mean, the Tambios region where we are working, a lot of the miners are in that area. So that's work for them. So more mines, more opportunity is greater work for them. We work, very well with the local Tambios community. We're involved in community activities. We support them in terms of call it the ESG side of things, and they support us. So it's a symbiotic relationship between both groups. So yeah, they typically have been involved. For a new project, I can't suggest it's going to be positive or negative because I don't know what that project is. But having said that, I wouldn't take a project that basically was going to be a problem from the perspective of it's next to a park, it's sitting on agricultural land, or there's a group of NGOs that are going to give you a hard time as soon as you step foot on the property, because you do need that social license to mine. And if it's an issue, then despite the fact that it could be a significant prospective opportunity, if you can never build a mine there, then you're wasting your time.
Well, but if you can, what then is the reason that this potential IOCG district here has not been consolidated and expanded before? I mean, what you're trying to do here sounds like a simple enough operation. Is it maybe too small for most companies, or is there something else that I'm missing here?
Well, I think probably it could be considered too small for some companies. It also has a lot of smaller privately owned properties, and sometimes that's a challenge to deal with. So, from a mid-tier or major, they want to start at the top and then possibly move back downscale to bring in projects that they can leverage, that they can perhaps improve in terms of economies of scale. Whereas we're kind of looking at it a little bit different from the other end, is start at the small end where you've got opportunity, make some money, and then search for the bigger things. That's something that's unknown to this market. And in fact, I think, people aren't prepared to do the hard work to work in that capacity. But I think anytime that you are producing and making money, you should be, as a company, very happy with that prospect, because, cash is very important, particularly in this market.
Right. Well, it seems to me like growth, again, is sort of the name of the game here for you specifically. That's obviously where the focus is. So I guess the word dividend is not going to come out of your mouth anytime soon.
Well, no, I mean, there is always that opportunity, but, in terms of where we are or where companies are, I think, companies throw out dividends like coupons. So they're trying to attract people to come to the store. And, when you've got cost of capital where we are now, I think a lot of companies that have issued dividends are probably challenged by that. When you had zero interest rates and a lot of cash flowing around, sure, hand it back. But when it's in a situation where your cost of capital is very high, your ability to raise capital in the future is unknown, I think dividends is a very risky approach, no matter who you are. unless you are basically a utility and you can afford to give dividends. But if you've got volatility of earnings, I just don't know why, you'd have that issue. But that aside, I think that there is opportunity here to grow into something. And if you've got cash sitting in treasury, you're in a good spot.
That's almost always the case, I suppose. You mentioned Nicaragua. You didn't say much about it, but I also don't suppose there's much to talk about in terms of Nicaragua. The asset is sitting there. So, I mean, a timeline that you can give me or something else regarding that asset?
Well, look, I would have looked back last year and said the timeline was now, right? But the fact is, it's just not moving, and there's nothing that we can do to motivate that moving. We, last year, 18 months, we lobbied the government for every Friday for 9 months, where we sat and met with the director and talked about this project. And the answers that we got were, be patient. These things take time, and continue your hard work, which we did. And look, even other companies who had, concessions that, up to 10% of the entire country took 2.5 years to be awarded. So we know that it does take a bit of time. And as I say, we're patient from the perspective because it's a zero cost option. Would I be happier in a situation in a stronger capital markets, higher gold price, and award the concession? Fantastic. I mean, that would be right. But the hard reality is that we are in a very different world right now. I mean, we have issues around Russia. We have issues around China. We have issues around Venezuela. And all those are impacted by Nicaragua. So, there is that also that's come into the cards.
Okay. I think I've gone through most of the questions that I wanted to ask. So to summarize, it's basically keep producing, working towards growing production to that 5,000 tons per TPM, basically, potentially getting to about a $4 million per annum in profit. And then from then on, try to grow whatever is close to home right now, exploration potential here and there, depending on how the capital markets are. And then also, as you just mentioned, wait and see what's happening in Nicaragua. Does that about sum up what you're going to be doing over the next couple of months?
Yeah, I mean, that is a summary. And again, that's not the goal. I mean, obviously, the goal is to bring in growth, and growth will come either sort of organically, but also from the perspective of, having an opportunity to bring in something that's very perspective for the company, to provide, that blue sky, to provide that upside, to give investors, opportunity for a good return. And a lot of that does come from, that exploration upside in terms of, bigger projects, district play, discovery style, that type of project. But you have to start somewhere. And that's kind of my point. My point being is that, we can bring in those projects and be in a very strong position by having, cash generated. Now, you mentioned earlier, is our focus on Chile? Well, Chile, for many reasons, is a good country to work in, specifically on the small scale mining side. Exploration or bigger projects, South America, Chile to me is the best of all those countries. Problems with Argentina, of course. There's problems with Peru. There's problems with Ecuador. So, Chile stands out as a mining destination. But that doesn't mean we wouldn't look in Arizona or in other parts of Canada. So, we're focused on the Americas, and the right project that comes along, we're not, restricted to Chile by any means.
Well, I'll be following along. Hopefully we can pick this up next time and see how far you've gotten. I don't think I have any other questions here. Is there something that you came here hoping to talk about, though, but I'm failing to bring up?
No, I think we've covered it. I mean, Antonio, that, like, as I say, the message here for me is that, we're building a sustainable mining company, starting with small scale production to produce cash, to generate an opportunity to be sustainable. And with that, we grow through acquisition, both organically and also, bring in projects that, help us move the company forward.
Alistair, thank you so much for investing your time with me today.
Great. Okay, Antonio, thanks.